Yo, what's going on, guys? Welcome back to another video, and in this video I'm going to show you the indicators that I personally use. These are indicators that I find that work the best and they're easy to use. So without further ado, let's go into my computer. But before we do that, make sure you have subscribed and also like this video so other traders can see it. Now let's get into my computer. Yo, I think it's really funny because literally 10 seconds ago I was singing into my microphone to make sure it was working. Wanted to tell you guys that before I got in because there's a lot of testing that goes on before I actually make these videos, so you guys just so you guys know. But without further ado, let's get down to business. So I want to show you guys like the indicators I'm working with. I want to make this really simple, very easy. Some indicators you guys might know, but there's a different way that I use these indicators. So I want to start off with my indicator list right here. I have my 20 moving average. So my 20 moving average is this yellow line right here. And the thing I like about the moving average is the way that I kind of use them is I like to use them to overall see like what type of trend are we in. So as you look on higher time frames, you can see, but usually one of the things I look for is whenever I see that the candles are above the moving averages, like right here, that's signaling me that we're in an uptrend. So let's go to the minute 15 and check it out. So you guys can see as we closed above, we have this shooting star right here that closed above the 20 moving average and the 50 EMA, and then it started to really push up. So that's how I like to use the moving averages. Also with the moving averages, usually when I see something like this, where I'll see a doji closing below or above the moving averages, that's when I'll take a sell or a buy position. So right here, we have a doji, we're already in a downtrend. We have a doji right here, closing below our 50 MA and our 20 MA, giving us a good short opportunity. Now, I'm gonna give you guys some real sauce right now, and I hope you guys are ready for this. Every time that we see the 50 MA crossing over the 20 MA like this, that's signaling a sell. When we see the 50 MA crossing under the 20 MA, that's signaling a buy. So we can see right here at the same time that this doji closed right below the 20 MA and the 50 EMA, what happened? The 50 MA crossed over the 20, or the 50 EMA crossed over the 20 MA, signaling a perfect sell. Obviously that wasn't in my session, so I wouldn't have taken that. Okay, so really the 20 MA and the 50 EMA work very good together. I like the EMA because it's a lot more smoother than the MA, but for the MA I like to use a 20. So the next indicator is the 200 EMA. So a lot of the time when I'm trading, I will use the 200 EMA as a take profit, believe it or not. Another thing that you guys need to understand with the MA is a lot of the times when you see two hits to the MA like right here, that's giving us a signal that it's going to reject that and go the opposite way. So right here we have a hit, long wick rejection, then we have one more hit, railroad tracks right here, rejects it. This next 15-minute candle completely blows out that previous 15-minute candle, also giving us confirmation it's going to go, and boom. Yeah. Let's see if we could see another example of the 200 EMA. And overall, you guys can see that at this point in time, looking at the minute 15, the candles are also above the 200 EMA, signaling that we are in an uptrend. And right here, look at how the candles are below, and we are in a downtrend. Okay, so here's another example of the 200 EMA. We have two hits to the MA right here, or EMA, one, and then one last hit right there, and that's also during the New York session. So that would have been a really good opportunity to short the market after you saw this long wick, and this candle closed all the way down there. I would have definitely taken that trade right there, okay? Now the next indicator that I want to share with you guys is one of my favorites, and you guys need to figure out what type of trader are you, and also when are you trading. So if you go right here to the indicators and you type in sessions, get this one, sessions London, New York, Asian, and you go to the settings, And yeah, it's not going to work. So let me refresh this real quick, guys. Literally just woke up from a nap, so I'm kind of still waking up. That's why I'm stumbling a little bit in my words. Okay, so we have our sessions right here. After you add it, you're going to go right here, and you guys can add whatever session you want. The only session that I trade is the New York session. It's highlighted in blue. You can add the Asian right here. You can see it popped up. Take it away. You can add the London. So in a couple hours, we're going to have the London session open up. But yeah, I like the New York session. I just like to see the time ribbon so I can justify and identify when the New York session is. So if I want to back test, I'm like, all right, perfect. I'm on the minute 15. Let's go down here. Okay, here's the New York session. Here's the New York session. Here's the open of the market. Boom. It's really easy to identify that stuff. Now the next indicator, very, very basic indicator that I like to use, and that is the Stochastics Oscillator. Now the stochastics overall show us when the market is oversold and when it's overbought. We have our levels right here. We have our 80 and 20 right here. Our 20, whenever you see that the Bollinger or the stochastics are below like that, that's telling us that it's oversold. When you see that they're crossing over the 80 line right here, that's showing us that the market is overbought. So you have your cursor right here that you can see on the screen. It matches up with the chart on the bottom with the stochastics and also with the chart on top. So you kind of seen right here, okay, well on the stochastics we're oversold right here, or we're overbought, excuse me. We have a bunch of dojis lined up rejecting this golden zone. This looks like a good selling opportunity. Put your stops right above those wicks, right about there, and then write it down to the next golden zone. And this was in your New York session ribbon right here. Okay, now I'm gonna have to delete this indicator real quick, and I'm gonna have to add the Bollinger Bands, baby. I used to use these all the time. I don't anymore. But the Bollinger Bands are pretty sick. So I'm going to explain exactly how I use them so you guys can see. So when we see that the Bollinger Bands are super tight together like that, when they're squeezing together, that's showing us that there's most likely going to be a big move in the market soon. And it's crazy because right before the move happens, you could see the bottom Bollinger Band kind of squeeze out like a prong, and the top as well. You guys see how it kind of has like a prong coming out? It's forming a prong. So it's squeezing together super tight, and then it's expanding slowly. We could say, boom, we have this big move right at the open of the market. Okay? That's showing us that that's a good indication that the market is going to have a lot of volume in it soon. Now, the other thing with the Bollinger Bands, you guys can see that we have like this cloud around the candles, but look how the candles right here went outside of the cloud. Look at also at the stochastics right here, how they're oversold. Whenever you see the candles are outside of the Bollinger Bands like that, that's giving us a sign that it's either oversold or overbought. So right here, it's completely oversold. We have a spinning top right here. Our stochastics are crossing under. We're right above the 20 level on the stochastics, and we're outside the Bollinger Band. So we have multiple confirmations telling us like, yo, like, this is a good buying opportunity right here. So you could have seen that and be like, all right, perfect. Like, let's take a long position, stops right below this golden zone. Let's ride it up to the next golden zone, and let's get it. And if you guys study more advanced types of trading, you guys understand the market makers, you guys can understand the whole logic behind this. So the market came out, here's the open the market, trapped lower level short holders, then continue in trend. So we had a bunch of people go short right here. But a lot of people didn't enter right at this wick like advanced traders would. They're entering sells all right here at the bottom once the work is done. So all these people sold, and they're all in sells. And what does the market do? Consolidates for a minute to pick up and accumulate more orders, and then completely takes off the opposite direction, literally screwing everyone that went short right here, hitting their stops all on the way up. And the actual money, the hedge funds and the banks, what they're doing is going long. So they just added orders right here to go long, while other people were adding shorters, or I should say retail traders were adding orders to go short, and they all got screwed. So you kind of got to understand the logic behind the market, why it does these dramatic quick moves like that, why the market has these long wicks right here. Whenever you see wicks like that to the bottom, that's giving you a sign that it's most likely going to go up. When you see a lot of wicks to the top, that's giving you a sign that it's going to go down. So yeah, these are the indicators that I want you guys to check out. Test them out for a couple days, a couple weeks, and let me know what you guys think. See you on the next video. Peace out.